Hi, Paul Gerard from Price Accounting Services. Welcome back to this further video in our channel on investments. This video is going to do with corporate actions. Corporate actions is it's just a common term used in the markets when share and trust registries have special events that apply to the unit or shareholding that affects the investor. Now we're going to talk about some of them and how they work, just so that you've got an understanding of how they impact your record keeping and what information you provide us for tax purposes. So, share consolidations. Share consolidations occur when a company reconstructs its holdings. For example, Wesfarmers could issue 100 new Wesfarmers shares for each old Wesfarmers share held in the value of 150. So 150 shares, you get 100. No CGT event actually occurs with a consolidation because your holding, your fractional interest and proportional interest has not changed. Okay? It's merely treated the same dollar value of your cost base is still held. So if you'd paid $10,000 for 150 shares, your cost base for your 100 new shares is still $10,000. Okay? So your cost base doesn't change, but your holdings do. So in those cases, I would generally go back in my CGT record and change the quantity held as if it had always been that number. Okay, and you might make a note to the side to indicate the date of the event. Okay. The opposite of that is a share split. So a share split occurs when a company may reconstruct the holdings to increase the quantity of shares each investor holds. For example, BHP may split 1 to 10, so that for each investor holding one share, they get 10. Let's go back over that. Share splits occur when it reconstructs to increase the quantity. So a 10 to 1 split may occur so that an investor holding one share then holds 10 shares. So again, it's just a case of going back to your CGT record and altering the number held. Your cost base, the dollar cost base, does not change. The date you acquired them does not change. So it's just a record, and we would typically turn around to the side and make a note of that event, the date, and do no more. But what it does do, it dilutes your cost per share that is held. Okay? Because you've got so many more shares. Okay. Another corporate action that occurs is a demerger. And a demerger occurs when a company splits into different entities. A recent example was Wesfarmers demerging Coles. So they demerged the Coles supermarket, entered into its own ASX-listed trading security. Look, many alternatives occur with these, and this is where I might suggest you Google the CGT guidance from the ATO for that specific year. And you will find the company has already probably obtained a ruling, or the ATO has issued a public ruling in respect of it. So, for example, when Wesfarmers Coles demerged, a designated percentage of the cost base of each investor's holding was attributed to Coles. I'm just going to say, for example, 8%. So that if you previously held 100 Coles shares, you got 100 Coles shares, 100 Wesfarmers, and 8% of the cost went to the Coles shares and 92%. Okay, so you've got to look at each one individually. Sometimes the quantity of shares varies. They're all very different. So you've got to go back to your guidance information, your tax guidance information from the company. It's generally also available online, and it's also available generally through the ATO, so if you can Google that. Okay? So keep that paperwork. Contrary to everyone's belief that some of this share information paperwork can come in handy at tax time. The opposite to a demerger is a merger. So a merger occurs when two entities combine following an acquisition. Now, sometimes when a company acquires another company, the shareholders are paid cash, in which case it's a CGT event and it is a disposal. On other occasions, it could be an equity acquisition, in which case the investor may receive cash and or new securities in the new entity. Very complicated, but again, you've got to go back to your share registry information, the information tax guidance from the company, and also that of the ATO, who will often have a ruling in respect of it, which might treat it as a rollover or as a partial rollover, and it might also come with tax consequences, including things like special dividends that are paid. They all vary enormously. So that information is generally available online. If you've got any doubts with these things, send us the information. We'll ensure that you make the correct choices and that you've got the correct records to go forward. Another one that we commonly see is a rights issue. A rights issue occurs when a company issues rights to existing security holders. Okay? Now, they commonly do this because it's a protective mechanism to raise capital and also broaden existing shareholding by existing shareholders rather than bringing in new investors. So it limits takeover actions and things like that. Okay? But typically a right is issued to an investor for no value. So you might, and it's a bit like an option in that it gives you the choice. So for example, you might be issued rights at no cost to acquire more shares in Air New Zealand, as recently occurred in late 2022. The investor can either choose to buy those new shares for that price, which is often attractive. It's often discounted to market, although sometimes markets can move and make it unattractive. And if they do so, then it's just treated as a new acquisition, possibly at a discount, which no tax consequence to that. But sometimes investors choose not to exercise those rights. And the company will commonly have a facility where they will dispose of your rights to other investors who do want to exercise those rights. Because the rights will have a value. For example, let's say the traded share price for a company is $10 and your rights say you can buy the shares for $8.50. There's a $1.50 discount there for an investor. Now, you might not want to buy them for $8.50, but somebody else certainly will. And so they might see the value as less than $1.50, certainly, but they'll see value in that right. So the rights might be sold for, I'm just going to pick a number and say 50 cents. So your rights will be sold and you will receive a payment from the company. That will be a tax event for you. You will be subject to tax on that, but it will commonly also be dealt with under CGT rules, where it might be considered an element of your original shares, and so therefore it's subject to a discount. Each company is different. Check your tax rules, your investor guidance in the documents issued by the company, and or Google, and generally you'll also find the ATO. If you Google ATO rights issue Air New Zealand, they'll probably have some form of guidance on it as well. Which brings us to a similar but slightly different corporate action. That's an option. So options are sometimes issued with or additional to a security. And an option is similar to a right that it gives you the choice. So an option tends to be, features of an option include, it will have an exercise price. So it will say, for example, you can buy the shares at a nominated value. And it will also have an expiry date. So an option might be issued, for example, to issue shares that are currently at a price currently above where the market's sitting. So for example, shares might be currently trading at $10, but you've got options to buy at $10.50. Now, once the market moves to $10.50 or beyond $10.50, then obviously those options have good value, and the options might even be what's called exchange traded options, which allow you to sell the options to other investors, or you might be limited in the use of the options, for example, employee shares or executive employee shares, schemes might use options rather than shares to give the executive the option to buy shares at a later date. So generally speaking, when they lapse, well, when they're created, options generally won't have a value unless you know that they do. And when they lapse, they lose value. Sometimes shares are issued, new shares are issued with options associated at the same time, sort of like a stapled situation. But it might be that the option is attributed a value, maybe 2 cents, in which case, if they lapse, you'll realise capital gain on the lapsing of the option of the 2 cents. Okay. So the key message to this is with corporate actions is that share and trust accounting records should carefully be maintained, because corporate actions assist the CGT knowledge, reporting and everything else. There are also some more simpler CGT corporate actions. ASX codes change. Keep track of that. You'll be surprised how often we find a deceased estate has shares in a company excuse me, which no longer exists. And then it's a case of going back through registries and finding that, okay, Mum had shares in Coles Myer Limited, and which has become Coles, which has then become, and so on, and then it's demerged, so Wesfarmers, that split and so forth. There can be quite a job to reconstruct. So sometimes just continuing to maintain record is very, very straightforward and simple. Far easier than coming back 4 years later when you do have the CGT event and you're trying to reconstruct. Okay. So proficient tax advisor will generally use the client's record with very minimal involvement if you keep the records. Okay. But poor records can add significant time and cost to tax services. Yeah, they sure can. I've seen situations where we've had to reconstruct 10, 15 and even longer periods of time. Major reconstructions to the information and data. And I've even had to spend days at the Mitchell Library looking at microfiche records from old financial reports in old stock exchange reporting on microfiche. So it varies. If you keep the records, it's very straightforward. And if somebody knows where they are on death, even easier. And we recommend, or we encourage, and we invite, if you have a copy of the records you would like us to keep, give them to us. We will ensure they're scanned and kept on file so that as you age or as you get older, the records are either continually maintained and retained so that if you do pass away, we can at least go back to the more recent information and give some reassurance to your loved ones. So hope that helps, and we look forward to you watching another one of these videos in this channel. And until then, see you.